All right, guys, so here is an example number 2 for the market maker second distribution entry model. So over here, you can see that we took out external liquidity right here, and our drawn liquidity is going to be this fair value gap right there. So let's study what happened here. So remember, from 15 minutes, we go to a 1 minute time frame. Now going over here, where you can see we took out the external liquidity, which was here. Now what we're waiting for is a shift in the market structure. Once you get the shift in market structure, that is when you have to look for a double break of structure. Okay, you cannot look at that before. However, if you have a higher high, higher low, and a higher high, right, and that second higher high gives you the market structure shift, that is valid. However, if you get a higher high, higher low, higher high without market structure shift, that is not valid. So you have to wait for market structure shift, and then you have to wait for that setup. However, if you get like a higher high, high low, and then a higher high, and the second higher high that is formed gives you market structure shift, then that is a double break of structure pattern as well. Listen to what I said if you don't understand this. So we have our first market structure shift, and now we're waiting for a break of structure. So that happens just right here. Now what we are waiting for is a purge on a high low, right? So we get a purge here, here, and here. Now once you get the purge, you have to patiently wait for a double break of structure once again. So over here, what do you see? We have a higher high, higher low, and then a higher high. So this tiny break of structure right here is a valid one. Okay, it doesn't matter, the size doesn't matter. That's what she said. No, she never really said that. Oh my god, bro. All right, so you get the break of structure here, higher high, higher low, higher high. That is your silver. Like it's not even silver, it's like a platinum bullet here at this point, because it goes way fast. Okay, so right here, this is your second distribution entry on this fair value. Remember to use the extreme fair value gap in this case, in this leg, right? So you have to use the extreme fair value gap in these two legs. So higher high, higher low, higher high, right? In these two legs, you have to use the extreme fair value gap. That is not touched before. And as you can see, we could have gone long just here. That was our drawn liquidity and a beautiful trade to the upside. So let me give you guys one more example.